Hi, this is Courtney with the Houston Properties team, and welcome to our Mortgage Minute, where we ask the burning mortgage questions you've always been wondering. We've invited our resident mortgage expert, Jackie with Rocket Mortgage, and today we're going to dive into some of the most common questions that we have from first-time buyers about mortgages and pre-approvals. So grab a seat, get comfy, and let's get started. Sounds good. I'm ready. All right, Jackie. So our first question is, how do I get the best rate?
Well, obviously, in order to get the best rate, interest rates are associated with credit. Credit is associated with risk. So the better your credit score, the better interest rates you're going to get. The way that mortgage companies look at credit is in 19-point increments. So if you've got anywhere from, let's say, a 660 to a 679, even though that's a 19-point difference, anyone in that range would get the same interest rate. Then 680 to 699, and so on and so forth. Now, anyone with a credit score of 780 or above, all the way up to what our algorithm goes up to, which is an 850, is all considered top tier credit. So that is what is going to get you the best interest rate. Now, there's certain things that you can do to improve your credit score in a short amount of time. Obviously, number one, you want to make sure that you pay all of your bills on time, even if you're only paying the minimum amount. You never want to make a late payment. But one major way to improve your credit score is if you've got a card with a high balance in relation to what the credit limit is, pay it down. You don't necessarily have to pay it down to zero. You can pay it down to under 25%, and you'll see a marked improvement in that credit score. And actually at Rocket Mortgage, we have a program called Credit Upgrade, where we can run a simulation to see if you've got multiple accounts, which ones you're going to get the most improvement from, and what amount paying them down would help you the most, to where that way you can best utilize some of your cash and not spend it all to where you're depleting what you've saved up for your down payment and your closing costs.
Jackie, that is fantastic information. So what minimum credit score do I have to get a loan?
At Rocket, we will go all the way down to a 580. With a 580 credit score, you can get an FHA loan, but there are stipulations with that a lot of people need to realize. When you have a credit score that low, there is a limitation that is placed on what we call your debt to income ratio. Now, in most FHA loans, your debt to income ratio can go up to 57%, meaning all of your liabilities, anything that's on your credit report, as well as your home payment, and that is your principal, interest, property taxes, homeowners insurance, monthly mortgage insurance, and any homeowners association dues. So all of that, along with all of the liabilities that show up on your credit report, cannot exceed 57% of your gross monthly income before taxes. But with a 580 credit score, that debt to income ratio max goes all the way down to 45%. So we are a little bit more limited. That's why having good credit is so important, especially nowadays with the higher interest rate, because with the higher interest rates, that is making your monthly payments a little bit higher. And so that barrier to entry to get into a home, when you're in that tough situation, it gets a little bit tougher.
More tricky.
Yeah.
All right. And Jackie, what kind of loan do I need to get a home?
You know, that's a really good question, because I could go on for days about the answer, because there is no such thing as a cookie cutter loan. And that's why it's really important to have a loan officer that is knowledgeable about a bevy of products out there. Because, you know, people say FHA. A lot of people think, oh, FHA is just for first-time home buyers, which is not the case. An FHA loan may be great for someone who has purchased a home before, but it's the one that's going to give them the best interest rate, the best options. If you're a veteran, a VA loan may be a great loan for you. VA loans are absolutely fabulous, but there's also some instances for veterans where a conventional mortgage would work better. And then within those umbrellas, there's different loan products that, cater to different people. You've got conventional loans that are for first-time home buyers that are going to allow them to put down as little as 3%, and it's going to have a reduced mortgage insurance payment. At Rocket, we have a conventional product called our 1+ program, where a buyer can actually put down as little as 1%. We will come up with the other 2% for the down payment, and there's no monthly mortgage insurance. So for somebody who might be a little bit of challenged with that debt to income ratio again, where that comes back into play, getting rid of that monthly mortgage insurance can be a game changer. So it's not a one size fits all.
Fantastic. And one more question. How bad are interest rates and how will that affect me?
Well, that's a I don't know if that's a great question or a bad question. So interest rates are not what you would consider, from a historical standpoint, they're not as bad as they appear. Are they higher than what they have been in years past? Obviously. And we've seen them increase at a trajectory that hasn't really happened before. And with the higher interest rates, again, it can make it a little tougher to get into the home that you're wanting. Especially if you're comparing yourself to a coworker who makes the same amount as you, but they bought in 2020 or 2021 when the rates were artificially low, and now you can't afford the same house as they can, even though you guys make the same amount of money. So with the higher interest rates, you may have to compromise a little bit on home size or some things like that. But I will always say, if you are in the position to purchase right now, or if you are needing to purchase right now, don't let the rates stop you from doing that. Because as your great real estate agent, Courtney here, can attest, home values are not going to be dropping. So if you can get in right now, go ahead and build that equity. And as soon as rates begin to drop, we can refinance you. So you'll already be in the home, you'll have earned equity, you will have gotten it at a lower price point, and you'll have saved yourself just throwing money away on renting. Because remember, the interest rate on rent is always 100%.
That is a wrap for today's Mortgage Minute with Courtney Williams and Jackie Sager. If you would like more information about Rocket Mortgage and what they offer and want to get started on your new home buying journey, just click the link below and we'll see you on the next episode.